Hello, I'm Stephen Cruz. I am a mortgage broker with mymortgagebroker.com and Paragon Mortgages, Inc. And today I wanted to talk about um, if mortgage insurance is mandatory. Now, a week ago, I did a video on mortgage default insurance. And when clients ask me, is mortgage insurance mandatory? They really can be asking me one of two things. They can be asking me, is mortgage default insurance mandatory? Or they could be asking me if mortgage life insurance is mandatory. They're both very different. So if you want to find out about the default insurance, check on one of the other videos. I'll put the link in the description and you can watch that video that talks a little bit about the default insurance. In this video, I want to talk about mortgage life insurance. And so I will chat about the life insurance that's typically available through most lenders, most banks, and then some other alternatives. So why don't I just share my screen? And so I wrote this article a little while ago about mortgage life insurance. And basically I wanted to cover the question that I do get from clients all the time. And so this article, I'll put the link in the description as well. So today I'd like to just cover in brief some of the topics that are covered in this article, and then go through the life insurance that I typically recommend to clients and why I recommend it. So with respect to mortgage life insurance, normally if you go to a lender and the lender offers you mortgage life insurance, what happens is that they set it up based upon the mortgage amount, and they'll potentially offer you disability coverage based upon the payments you're making. One of the disadvantages of mortgage life insurance that is available through most banks and lenders is that it's on a decreasing term. So it's a joint first to die life insurance policy, which means that if there's two people on it, it's joint policy. And if something happens to one or the other individual, it pays out in full, and then the insurance is canceled. And the payout of the insurance, if one of the two parties passes away, the payout of the insurance, it pays the bank, pays off the mortgage. So now the property is free and clear. Sounds good, but that other individual may or may not want to do that, and they may want to have control over it. So that's one of the issues. The other issue is that it's on a decreasing balance. So as you make your mortgage payment, your balance is going to go down, and it actually goes down a lot more rapidly than some people think. At current interest rates today that are under 3%, mortgage payments actually take a substantial chunk of the principal every single month and pay it off fairly quickly. So, and we can go through those calculations another time. But the disadvantage to this mortgage life insurance is that you're paying for, say, $500,000 up front, and the balances start rapidly going down. And usually over 5 years, it could be down $60,000 to $100,000 depending on the payments you're making. But you make the same life insurance payment or the regular payment on it over the term, even though the balance is decreasing. So it makes it seem like it's a good deal, but it's not necessarily. So the two things I don't like: you pays the bank instead of the beneficiaries, and it is on a decreasing balance. So the payment goes down, the value of the insurance goes down even though premiums are the same. And so what I typically do is I like to offer some clients private insurance instead. And as a mortgage broker, I looked at this insurance, and I've been a mortgage broker for a long time, and I was never really a fan of the insurance that I had to offer. And so actually I became licensed as an insurance agent so that I can offer a better insurance product. And so what I'd like to do is first show you a video that talks a little bit about a situation, and then we'll come back and I'll talk a little bit about the insurance. How about a book?
Oh, that one again. Life is for living. Make sure you live it well. Jump in puddles, play in dirt, dress up like a baboon having a tea party in a skirt. Now, there may come a time when I'm no longer here. Just remember that life is for living, so be of good cheer. If you're reading this, that must mean that I'm gone. But don't be sad, because life is for living, and you must live on.
You'll be okay, Buck. It's possible. You can share it.
All right, so hopefully you enjoyed that video. It was a short 1-minute video or whatever. And I have to say that when that video really touched me, and I think it's important for families to have the proper coverage. And I remember when my kids were little, I used to read this book to them. I'm not sure if you can see it. Robert Munsch, Love You Forever, and I can't read it today. I choke up. I barely can read this now, and but my kids used to love it, and we used to read it all the time through Daddy's Tears. And I'd hate to see something like that happen to any family. So it's important for me that my clients have adequate coverage. So so with respect to life insurance, one company that I really like, and I'll again have the link below, and I have access to lots of different companies, and I'll tell you why I do like this one. So if you scroll through this article, there is a link in here that will go to the insurance that I like. So you can do that just in here under this. And again, I talk about being biased. So I do like it. So it's called, it's Assumption Life Insurance. And I work with Foresters, and I work with Assumption Canada Life. I work with lots of different Equitable Life, work with lots of different insurance companies. And the reason I like this one for mortgage clients, so once you go through the link, you'll go to this Better Mortgage Insurance, and then you can scroll down and then put your details in. So what I thought I would do is put in some information for a 35-year-old couple, basically, born in 84, the husband and wife, born in 84, they don't smoke, they're employed, and they work more than 20 hours per week. And so you put that in, and then you put a little bit of information about the mortgage. So the 25-year amortization. So if you have a 25-year amortization, you can do it for a shorter time or a longer time. It's up to you. But the idea is to have it match with your mortgage term and the province that you live in. I put in Alberta here, but you can put in all the provinces are available. $500,000 coverage. I'm just using that as a mortgage amount. Again, I use $500,000 here on my on my website quite a bit, just because it's easy, an easy number to highlight some good differences. And the mortgage payment is $2,500 approximately, including property taxes. It could be $2,700. So I just use $2,500 as a generic number. You don't have to put this whole amount in. If you don't want coverage for that amount, you could put in less. If there's two parties, it would cover that for either party if they became disabled. So if there's two people making payments on the mortgage, then you may only want to put coverage for half that, so that the other person, they'll probably still make the payments if one person is disabled. So we press calculate, and it comes through to this calculation here. And as you can see, just move this over a little bit. As you can see here, there's three options. So, and this is why I like this insurance, because there is three options. So you can just choose to take life insurance, and life insurance for two individuals for $500,000 is only $80. Now, $79.65. So that's a very good deal, and it gives you some peace of mind that you're covered for the next 25 years for the $500,000, not for a decreasing balance, but for a full $500,000. If you wanted to, if you don't have coverage through work or whatever, you can include or add on disability insurance. The great thing about this disability insurance is it is underwritten like a life insurance policy. So a lot of private disability insurances are difficult to qualify for. People just don't qualify because stuff happens in our lives and we might get sick or whatever. It makes it difficult to qualify for private disability insurance. This is underwritten differently, like a life insurance policy. So it's very good. More people qualify for this than you would if you went out for a specific private insurance. And so that this costs about $100 a month to cover $2,500 in payments, and it will cover up to 24 months of disability. And then the other thing that they offer through this company is critical illness, which nowadays it's so important. People survive different events in their lives that they never did survive in the past. Critical illness was created by doctors. It wasn't created by insurance companies. Doctors, a doctor, heart surgeon, knew that his patients were surviving because the technology and his skill and expertise was allowing patients to live, and they'd spent all their money on their health, and now they didn't have any money left. So this critical illness helps to give you some money when you're in need. These two insurances are living benefits. They're your benefits, not to give to some other family member like a life insurance policy is. So another $36 a month for the critical illness. And so overall, you're going to pay $221 a month, but for two people, coverage for three different things is a pretty good deal. One, if the affordability is an issue, one thing I do look at with clients is to reduce this disability number. And if you were to cut it in half and use $1,200 in coverage instead of $2,500, then the payments come down quite substantially. So twice the cost of life insurance to get all three. And again, these are really great benefits for clients. I can go through more details about that if you have any questions. What I'll do is I'll put the link in there in the spot below so that you can click through and test it. There are other places you can check costs of insurance, and in my opinion, it's not about choosing the cheapest insurance. There's a website, and I can let you know what that website is in the comments. But there's a website you can go to that will compare all the different insurance companies available for your age and sex and what you would qualify for. And the one thing, most of the insurance coverages are very similar. The cost is very much similar, but sometimes in these comparisons, some insurance companies are more picky about your health and some are less picky. And so they all say it's based upon their pricing is based upon, say, a standard rating, but some of them may not rate you standard where others might. So you have to weigh that when you look at insurance. You also want to weigh the benefits. Some insurance companies like Foresters has a whole bunch of extra benefits for families and scholarships and volunteer activities and all sorts of things they do to give back to the community, and you can take advantage of those things if you purchased insurance through them. So it's important to talk to an insurance specialist when you are talking about insurance, and you should have some sort of coverage. One of the objections that I hear from clients regarding insurance is that, well, you know what, I have no kids. I don't need to have coverage. I'm just buying this house myself. Why should my parents get a free and clear house? What's the use in that? And your likelihood of passing away when you're young is very low. So yes, perhaps life insurance isn't, necessarily there for people who you leave behind, but when you purchase life insurance when you're young, you're actually protecting your future insurability. Lots of things happen in life, or we start doing things that insurance companies don't like, and if you take up a dangerous sport, or considered risky sport, or if you have some sort of an injury or life event, whatever the health event, and then your future insurability is, you're no longer able to be insured, purchasing it when you did qualify is so important, because once you don't qualify, you would wish that you did. And insurance costs is so little for an individual. So what I'll do is I'll show you an individual. So we'll take away this, and a men are typically more expensive than women. So let's use the man's cost. So 35-year-old man who wants insurance for $500,000 and coverage for $2,500 a month. His insurance costs work out to be $50 per month. So for one individual, he can purchase the insurance for just life insurance for $50 a month. That's not a lot of money to protect your future insurability for one day when you do have a family and you do want to have insurance. Disability, if you're not covered through work, this covers you as well, and the critical illness. So in total, it's just a little over $115 for 3 coverages, which is very beneficial for you, and again protects your future insurability. So I'll leave some links in the box below. If you have any questions, please comment, and if you like the video, please like the video and press subscribe so that you can find out more about mortgages, mortgage, life insurance, and everything about finance in Canada. Thank you, and have a great day.